Hello, future crypto investors. Are you ready to dive into the world of cryptocurrency investment? This digital frontier is brimming with exciting potential and opportunities, yet it's not without its share of challenges and risks. In this journey, we'll navigate the essentials of crypto investing, delve into effective risk management strategies, and discover the importance of a diversified portfolio. So buckle up as we decode the secrets of successful crypto investing. Let's embark on this thrilling journey into the financial future together. Let's start with the basics of investing in cryptocurrency. It's not just about buying Bitcoin or Ethereum, it's about understanding the whole market. The first step, like with any journey, is to educate yourself. Take the time to learn about different cryptocurrencies, how they operate, how the market functions, and the technology that powers it all. The more you know, the better your decisions will be. You might be eager to dive right in, but remember, it's essential to start small. There's an old saying that goes, "Don't put all your eggs in one basket," and it rings true here. Begin with an amount you're comfortable to part with, should things not go as planned. Investing in cryptocurrencies can be a bit like riding a roller coaster, thrilling, but with plenty of ups and downs. Next, you'll want to set your investment goals. Ask yourself, are you in for the long haul, or are you looking for short-term gains? Your strategy will depend on your answer. If you're planning on long-term investments, you might consider holding onto your crypto, weathering the storm of market fluctuations. On the other hand, if you're after short-term gains, you might find yourself trading more frequently, trying to capitalize on those market ups and downs. Now you might be thinking, but how do I choose which cryptocurrency to invest in? Well, that's part of the learning process. Each cryptocurrency has its unique features, benefits, and risks. Some might be more established, like Bitcoin or Ethereum, while others might be new to the scene, promising innovation, but also carrying more risk. It's important to research each one and make an informed decision based on your investment goals. And what about when to buy and sell? Timing in the market is always tricky, and this is where staying updated about market trends can be useful. Keep an eye on the news, follow reputable sources, and try to understand how different factors can affect the market. But remember, it's not just about timing, it's also about patience and sticking to your strategy. Lastly, let's touch on the topic of security. You've probably heard about cases of hacking or theft in the world of crypto. It's crucial to understand that while blockchain technology underlying cryptocurrencies is secure, the platforms where you buy, sell, and store your crypto might not be. So always use trusted platforms, enable all security features, and consider using a hardware wallet for added protection. Remember, the crypto market is like a roller coaster, thrilling but full of ups and downs. It's a world of immense potential, but it requires careful navigation. So educate yourself, start small, set clear goals, and always prioritize security. This will set you on the path towards becoming a successful crypto investor. Now, let's talk risk management in the volatile world of crypto. The exciting yet unpredictable nature of the crypto market can make it seem like a Wild West scenario, but with the right strategies, you can navigate these uncharted territories with confidence. First and foremost, let's talk about the golden rule of investing, a rule that holds firm whether you're investing in traditional stocks or unpredictable cryptocurrencies. Never invest more than you can afford to lose. This can't be stressed enough. The crypto market is known for its high volatility. One day, you may see your investments soaring, and the next day they could plummet. So, always keep in mind that the money you put into crypto should be money that you're fundamentally okay with losing. Next, let's discuss the importance of staying informed about market trends. The cryptocurrency market is constantly evolving, with new coins and technologies emerging all the time. It's crucial to keep your finger on the pulse of these changes. Follow reliable news sources, join online forums and discussions, and keep an eye on market trends. However, it's also important to remind you to be wary of hype. In the crypto world, hype can inflate the value of a coin temporarily, but what goes up must come down. So, always do your own research before making any investment decisions. Now, let's move on to a handy tool for risk management, setting stop-loss orders. A stop-loss order is a kind of safety net for your investments. It's an order placed with a broker to sell a security when it reaches a certain price. So when the price of your crypto falls to the level you've set, it automatically triggers a sell order. This way, you can limit your losses if the market takes a downturn. It's like having a built-in exit strategy for each of your investments. Finally, we come to a critical strategy for managing risks in crypto investing: diversification within the crypto market itself. It's easy to get caught up in the hype of big-name cryptocurrencies like Bitcoin and Ethereum. But remember, there are thousands of other cryptocurrencies out there, each with its own potential for growth. By spreading your investments across different cryptocurrencies, you can mitigate the risk associated with investing in just one. Think of it as not putting all your digital eggs in one basket. This doesn't mean spreading your investments thinly across every available cryptocurrency. Instead, it means strategically choosing a mix of different coins and tokens based on their performance, potential for growth, and the technology behind them. For instance, you might choose to invest in a few established coins, some promising altcoins, and maybe even some tokens associated with blockchain projects that you believe in. Diversifying your crypto investments can help you take advantage of the different opportunities that different cryptocurrencies offer, while also protecting you from the volatility of the market. Remember, the goal is not to eliminate risk. That's impossible in any investment. Instead, the goal is to manage risk, to balance the potential for high returns with a level of safety that you're comfortable with. So, there you have it. Risk management in crypto investing is all about understanding and navigating the market's volatility. It involves following the golden rule of investing, staying informed, setting stop-loss orders, and diversifying your investments within the crypto market. As you venture into the world of crypto, remember these strategies and use them to guide your investment decisions. Explore different coins and tokens, as this can help spread your risk. With well-informed decisions and strategic risk management, you can make the most of the opportunities presented by the exciting, ever-evolving world of cryptocurrency investing. Diversification is key in any investment strategy, and it's no different with crypto. If you've ever heard the phrase, "don't put all your eggs in one basket," then you already have an inkling of what diversification entails. In the context of investing, it means not tying up all your money in one place, or in this case, one type of cryptocurrency. Picture this. You're at a buffet. There's a vast array of dishes, each more mouth-watering than the last. Now imagine you decide to fill your plate only with spaghetti. Sure, it's delicious, but there's so much more to try. Plus, if you suddenly realize that you don't like spaghetti as much as you thought, well, you're stuck with a whole plate of it. It's the same with cryptocurrencies. There are thousands of them out there, each with unique features and potential for growth. Bitcoin and Ethereum might be the most well-known, but they're just the tip of the iceberg. Diversifying your crypto portfolio means spreading your investment across different types of cryptocurrencies. This could include major players like Bitcoin and Ethereum, but also smaller altcoins and tokens. But how do you decide which cryptocurrencies to invest in? This is where factors like market cap, technology, and real-world use cases come in. Market cap, or market capitalization, refers to the total value of all coins of a certain cryptocurrency that are in circulation. Generally, a higher market cap means a more stable investment. However, smaller market cap cryptocurrencies can offer a higher potential for returns, albeit with a higher risk. Next, consider the technology behind the cryptocurrency. Is it simply a copycat of Bitcoin, or does it offer something new and innovative? Cryptocurrencies that bring something unique to the table, whether it's faster transaction speeds or advanced security features, could have more growth potential. Finally, consider the real-world use cases of the cryptocurrency. Is it simply a store of value like gold, or does it have other applications? For example, Ethereum is not just a cryptocurrency, but also a platform that enables the creation of decentralized apps. Remember, while diversification can help manage risk, it doesn't eliminate it. The crypto market is volatile, and prices can swing wildly in a short period of time. As such, it's important not to invest more than you can afford to lose. Furthermore, diversification is not a set-it-and-forget-it strategy. The crypto market is dynamic and ever-changing. New cryptocurrencies are constantly being launched, while others may fall by the wayside. As such, it's important to keep a finger on the pulse of the market and adjust your portfolio as necessary. Maybe a new cryptocurrency has caught your eye, or perhaps one of your current investments is not performing as well as you'd like. In either case, don't be afraid to make changes to your portfolio. In conclusion, diversifying your crypto portfolio is a strategy that can help manage risk and potentially increase returns. It involves spreading your investments across a variety of cryptocurrencies and regularly reevaluating and adjusting your portfolio based on market trends and performance. So, the next time you're faced with a buffet of cryptocurrencies, don't just stick to the spaghetti. Try a little bit of everything. You might find that the variety not only makes your meal more interesting, but also more satisfying. Keep evaluating and adjusting your portfolio as the market changes. After all, the world of crypto is a dynamic one, and staying adaptable is the key to navigating it successfully. There you have it, a primer on investing in cryptocurrency. We've taken a journey through understanding the market, managing the risks, and diversifying your portfolio. This trifecta is the cornerstone of a prudent crypto investment strategy. Remember, the crypto world is a thrilling yet unpredictable ride. So stay informed, be cautious, and adapt as the market evolves. And most importantly, never stop learning. Until next time, keep exploring the exciting realm of digital currencies.